Hey traders, Jason here from Lever Brothers. So, want to talk about the state of the market right now. Okay, I do this every week at Lever Brothers. I do this every couple weeks on YouTube. Just want to take a step back, check out the indexes, check out breadth. And in this video, I'm going to take a look at some individual stocks just to get an idea of what's going on out there. All right, let's get into it. So here is S&P 500 monthly chart that goes back more than 10 years. Okay, pretty steady uptrend, some disruptions along the way. This was COVID. This was a very normal, midterm bear market. This was the tariffs. Pretty normal stuff. Market moves up, market corrects, market moves up, market corrects. There's nothing overly alarming here. Okay, we're in the midst of a 5-month win streak. You could argue that that's getting a little bit extended, but there's a 5-month win streak and it kept going. There's a 5-month win streak. There's a 5-month win streak. There's more than 5 months. There's 5 months. 5-month win streaks are actually kind of common. There's a bunch of months in a row. And there's a lot of stats out there that say that when you have a 5-month win streak, the odds of the market being up a year later are extremely high, like higher than normal. So 5-month, gains tend to build on top of gains. Yes, you could have a little bit of a disruption, but the fact that you could have a 5-month win streak is a good sign for the future because strength tends to keep building on strength. All right, so no warnings here, nothing major. Could we have a little bit of a correction? Absolutely. But overall, the market is strong and healthy, moving up. And for now, as far as historical studies go, there's every reason to believe that the market is going to be strong well into 2026. Here's the S&P Weekly. As you can see, just bottomed in April. Steady movement above the 8 EMA. Okay, and that's typical. When you have an uptrend, like say over here, it rides the 8, dips to the 21. Rides the 8, dips to the 21, rides the 8, dips to the 21. That's pretty normal stuff. Like during the strong part of the trend, it'll just ride the 8, and then every once in a while, it'll dip to the 21. Could that happen now? Of course it could. But just because it happens doesn't mean the show's over. It's like a normal pause within a strong market. So this looks really, really good here. Moving on to the others, and I'm not going to go through these in too much detail. Here's the NASDAQ, same thing, steady uptrend, riding the 8 up, no warnings here. Here's a Russell 2000 small caps, recently hit a new high. Everything looks good. By nature, the small caps are a little bit more volatile. Volatile meaning like they kind of jiggle in place a little bit more. There's less free-flowing action, but off the April low, it took a little while to get all the gains back from the 2024 high, but eventually they got back and we just hit a new high, so that's good. And then the mid caps, maybe you can argue that there's a little bit of a warning because they're not at a new high. Actually, what happens is a lot of times with some indexes is that the gain off the low is just as good as the gain off the low everywhere else. It's just that the drop into the low was much bigger, so it had a bigger hole to climb out of. Okay, but if I'm going to gauge this relative to the April low, this is like higher highs, higher lows. The index moves up, it consolidates, it moves up, it consolidates. And right now everything looks pretty good. So I don't see any warnings here. All right, so let's get into some indicators here. So here's the SP 500 versus the 5-day moving average of the NYSE AD line. It's pretty normal within an uptrend. You're going to get a divergence, then a little bit of a pullback. Okay, so you got a higher high here, lower high here, and then you get a pullback. And you could pause this if you want to see that, like trend up here, lower high here, and then you get a pullback, and trending up there, lower high divergence there, and same thing here. We got pushing higher. Divergence here induces a little bit of a disruption. So what happened last week where we had 3 down days, the S&P dropped about 130 points in 3 days, is very normal stuff. Okay, there's nothing alarming about what took place last week. Could we continue down a little bit further? Of course. Could we move sideways for a week or two? Absolutely. It's all on the table. But there's nothing here that says that flashes some sort of an alarm, like major alarm. Now, a major issue would be if if the market bounced next week and this failed to get up above zero and it just kind of was like down here a little bit, that would be a bigger warning. Okay, that'd be a warning that, all right, the market's pushing higher. There's less, the market's pushing higher, but the AD line is not pushing higher, which means you have participation is declining. You have a small number of stocks pulling the market up, while beneath the surface, a lot of stocks are not participating. But we haven't had that yet. We can watch for it, okay, but it's not happening yet. Okay, backing up a little bit, this is the 10-day, 20-day, and 50-day moving average of the AD line. For a month here, we had the 10 was just hovering in the middle of its range, not too hot, not too cold, just steadily supporting the market. Same thing for the 20, not too hot, not too cold. 50 was doing just fine. So I don't see any warnings here either. We got drops last week. These drops are in the spirit of previous drops, so they don't issue any warnings. If you're looking for what would happen, what would be a warning is when you get, a deeper drop here like this, and then an inability to recover. Okay, so if we got another leg down from the S&P, and the 20-day moving average of the NYSE line, dropped like this, and then the market tried to recover, and we got this indicator hung out below zero and couldn't get back above, that'd be a warning. But what I see right now is just like normal stuff of a little bit of weakness within a strong market. And then here's the cumulative line. Obviously up, higher highs, higher lows, mostly riding the 21. Tops take time to form. Unless there's an external event, tops take time to form. They don't just form on one day. So looking back to the end of last year, beginning of this year, when there was a pretty big top, this looked good as the market moved up. Then the market had, a couple weeks off, and you got like a big dip here. Okay, a little bit of a warning shot that was such a big dip. Then the market recovers here to a new high, and you can see this, but then that high was at a lower level. So it took 4 months to put in the seeds to the high that formed in February. So if a top was forming now, we're like here. We're like just in the beginning phases. It could take several months for an actual top to form, and that's if a top is going to form. Okay, and when you get a top that forms, you typically get something like this, like a warning shot where like the indicators collapse and then they recover. They just don't recover fully. So what I see here says trend is in place and doing well, and we need to continue what we're doing. All right, next indicator. So this is the Russell 3000. This is SP 500 up top. This is the Russell 3000 stocks above their 20-day moving average. Okay, you get divergences that lead to minor pullbacks, and then bigger issues don't come into play until, unless you get a really big pullback and an inability to recover. So for example, you go back to earlier this year, you got higher high here, divergence here, market falls down, but then we get like some low prints down here, that tells us that the market really is weak, and then we get a bounce here, and this can't, this is the 50% line. It can't even get above 50%. So there were some warnings in here. Okay, and just like the last chart I showed you, like that first move down, we had a warning shot ahead of time, but it took several months for the top to form. So here, currently, I should back up a little bit, higher high here, lower high here. We got a little bit of a pullback, higher high here, diverging down here. So normal stuff. Okay, market strong, market trending up, divergence in place. We get a little bit of a pullback. Okay, and now we'll see what happens. Now, if we get like prints down here, that's going to be a little bit of a warning shot for the next move up. But right now, I consider this to be like normal stuff. Like as the market goes up and up and up, little by little, less stocks are participating. Eventually, when you get weakness beneath the surface, eventually that pulls the market down, which is what took place next week. And now we'll see what happens. If this kind of stays down here and can't bounce, then we're probably going to have like a little bit, a more extended week period. All right, here is same stuff, but with the 50-day moving average instead of the 20. Again, going back to the last top, a little bit of a weakness here, but we got a big move down here. Then the market recovered, got to a new high right here, but here's the 50% line. So even though the market recovered and went to an all-time high, the number of stocks above their 50-day moving average couldn't even get above 50%. So that's a big warning here. Okay, tops take time to form. We haven't even had a warning shot. We have had nothing down here. We've had nothing. So I view this as, pretty good support. Most print, yes, we have a little bit of a divergence that formed last week or over the last couple weeks, but we got pretty good prints here, pretty good readings, not too high, not too low, somewhere in the middle that just kind of steadily supports the market. So short term, certainly we can have some weakness, but overall, I don't see the seeds there for a big move down. All right, this is the S&P versus the 5-day high low. So the number of stocks making a 5-day high versus the number of stocks making a 5-day low. Okay, a little bit of a warning that we couldn't get up to 2,000, which has been a level that was touched many times. So a little bit of a warning there. Then we get a drop down to minus 2,000, which is pretty normal. So as long as we get a bounce here, we're fine. Okay, as long as we get a bounce here, we're fine. Longer term, this doesn't really tell us anything, but in the short term, it gives us a little bit of a hint. And over the last couple of weeks, the market has done really well, but we were told, hey, be careful because we're starting to get a little bit of a lack of participation. So be careful. So short term, little bit of a warning. Long term, nothing going on. All right, here's the all stocks 1 month high low. So stocks making a 1 month high versus stocks making a 1 month low. Okay, going back to the last top, got some warning shots here. Then the market goes up to a new high, and then we get a negative divergence. We haven't even gotten a warning shot over here yet. Okay, yes, we have a negative divergence. Okay, and yes, that negative divergence kind of induced a little bit of a pullback. Same thing happened here. Market pulled back, no big deal. Okay, it happens. Negative divergence here. Market pulled back. So I see this as like negative divergence forming within an uptrend. We got a little bit of a pullback. And that's fine. I don't see a reason to believe the market's going to actually top and fall a lot. Okay, could we move sideways? Sure. Could we correct a little bit? Of course. Okay, but I don't see any reason to believe that any correction is going to morph into something much bigger. All right, now let's look at some individual stocks. So actually, I look at the indexes, I look at the breadth readings, I look at indicators, but actually my number one indicator is just how well individual stocks are doing. Okay, if individual stocks are acting well, then the market's acting well. If the individual stocks start to falter, then that's a stronger sign than anything. Okay, so here's Oklo, trended up, did well, consolidated here as you can see, and then it ramped up, but then boom, fell hard. Okay, that's something we hadn't seen. Remember, the market was really weak at the beginning of August. Didn't affect Oklo very much. Weak in the beginning of September, didn't affect Oklo very much. Huge run here. The stock doubled, but then look how far it fell. It fell hard. Okay, that's a little bit of a warning. We haven't had a fall like that in a long time. Here's A-Lab, moves out of a base here, surfs above its 8 moving average, gaps up, consolidates here, and then runs again. But look at how big that drop is. That's the biggest drop we've had on this entire chart. Okay, we haven't seen that in a long time. Archer comes out of a base here, starts getting scooped up by its moving averages, tries to break out, gives it all back. Okay, so in a good market, stocks will break out, hold their gains, and then break out again. But here's a stock that broke out, pushed a little bit further, and then gave it all back. It's a little bit of a warning when stocks can't hold their gains, can't continue on. Cipher, one of our best trades over the last couple of months, done obviously really well. Notice how it comes out of a base here, sits above some moving averages for a week, and then takes off. One test, and then takes off again. Okay, that's all activity, that really healthy activity that you see in a bull market. And then last week got crushed. Okay, it's the biggest drop we've had. Biggest 3-day drop we've had. So that tells you some traders are a little nervous there. Okay, CLSK, and I'm going to go through these a little bit faster. Came out of a base here, sits above some moving averages, takes off, but boom, already down 20% just in a couple of days. Mara comes out of a base here, as you can see, volume good here, volume good here, volume good here, but then gives it all back. Okay, PGY, consolidation pattern here, terrible trend lines, I know. Another pattern here, breaks out, everything looking good, and then boom, falls. How many days in a row? 6 days in a row, gives it all back. It's all the way back down to where it broke out there. Okay, in a strong market, stocks move up, they consolidate, they move up again. They don't give gains back like this. They don't suddenly just turn around and fall 20%. Okay, Reddit, surfing its 21 here, surfing its 8 here, moves up, prints an all-time high, and then falls 5 days in a row and gives it all back. Last chart, Serve. Let's see if I can do this different. So it comes out of a base here. Volume is really strong. Consolidates over here. Shoots up again. Gives it all back. Okay. So overall, indexes are looking really good. Monthly chart, weekly chart, any chart you look at, almost any index is looking really good. Indicators are looking fine overall. In the near term, yes, there's been some divergences that have induced some weakness, but there's no warning shot. There's nothing that tells me that the uptrend is going to be over. Okay, we've known for a couple weeks that there's starting to be some weakness, and we're probably going to have a pullback, in which we got last week. But there's nothing that has told me that the overall uptrend is going to end. But we are getting a warning from individual stocks. Okay, did I cherry pick some examples here? Yes, but these are all stocks that we've traded. They're all stocks that were on the Levitt Brothers trading list that served us really well, made us some really good money. But we're starting to get some warnings because individual stocks are starting to falter. Okay, instead of moving up, consolidating, moving up again, they're moving up, consolidating, and giving gains back. It's a little bit of a warning in the near term that the market isn't quite ready to just continue on. It's probably going to need to rest and digest some of these gains, and that's what I'm looking for here. So if I were to predict what the market's going to do, and I hate predicting because ultimately I'm just going to follow the individual charts, but I could definitely see some weakness here for a week, 2 weeks, 3 weeks in October. And then I expect a really, really good November, December into January time period. Okay, it's kind of what I'm leaning towards right now. What does that mean? It means I'm not all in anymore. Last week I took 2 weeks ago I took some profits, but then added back. Last week, scaled out of some stuff. So I'm in the market, but I'm not all in. I'm expecting a little bit of weakness. And I'll be ready to go when the market bottoms again. I'll be ready to go and get back to being all in and take advantage of the opportunities. All right, hope you're well. Hope you got something out of this, and I will see you next time.